China, the world's second largest economy, is going through a tough time. China is facing a falling domestic demand as household wealth has taken a hit from the weak job market. China has also reported weak retail sales and weak industrial output. China is dealing with a high debt and exports slowing down. The property sector there is in a turmoil, with its real estate giant Evergrande filing for bankruptcy as well. And then there is an unfolding crisis in the nation's shadow banking system. This has fueled concerns over a deeper and longer slowdown in growth. Economists are of the view that China may struggle to meet its growth target of 5% in the ongoing financial year without an injection of fiscal stimulus. All of this has led to four prominent financial institutions negatively revise China's economic growth projections. But why is China's downturn emerging as a huge concern for the entire world? Well, simply put, China is the world's largest manufacturing economy and exporter of goods. Almost all the major companies across the globe, from Tesla to even Apple, have their supply chains rooted to China. In addition, the country is also the world's largest consumer of a number of important commodities, including metals. China accounts for approximately half of the world's metal consumption. And so, a decline in China's economic activity can severely throw off the global supply-demand situation. And therefore, Chinese economic recovery is crucial for global trade balance. The Chinese government has its task cut out, as it needs to convince households to spend more and to save less to boost consumption and therefore aid economic growth. Now, if the situation does not improve, experts believe China could well be on its way to face stagnation, which could cripple its economic growth for years to come. But for India, how will China's economic troubles really impact us, you ask? Well, not so much directly, as we have very little export and largely import dependency on China. So if at all, the impact could rather be positive for India than negative. For one, the foreign investors looking to park their money in a solid economy could now look for options, and a part of those flows are expected to come to India. Therefore, we could hope for India and Indian financial markets to get a boost. Secondly, more and more countries are looking to protect their supply chains, and this would further strengthen India's preference in the China Plus One theme. Also, if the Chinese economy slows down, commodity prices could fall and imports of such items could also get cheaper for us.
For more informative videos like this, keep watching India Today News.